Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Applied Digital, ticker symbol APLD. And so here we are looking at the chart on the daily time frame after the close on Tuesday, April 16th, having closed at a price of $2.45, being down just over 2.5% on the day, and closing below this key level that I have marked here at $2.51, or right around $2.50, that being, a psychological level. $2, 2/4, going to be one we want to reclaim. But yeah, I did want to follow up on the last video that I put out on Applied Digital, which I recorded on Sunday, April 4th, and then released on the 5th. And so I did record that during the Sunday night live stream, 9 p.m. Eastern. Make sure you join that if you do want a follow-up. But yeah, so I did release that on the 5th, on that Monday, and it does look like we had consolidated leading up to earnings that were reported on April 11th. And following earnings, we got this pretty big red candle actually opening up higher on the day, but then closing lower, being a pretty notable bearish engulfing candle, actually engulfing the prior week of trading, all of those candles within that candle being down almost 12% on that day on April 12th. And since then, we have continued lower this week, being down over 7% on Monday, April 15th, and now, like I said, down more than 2.5% on Tuesday. And so on Monday, we did close above this red line, closing at a price of $2.51.5. But then today, as you can see, we did close lower. And so that is potentially concerning. However, this could be a fake out break to the downside. So I would look for a move to the upside tomorrow and a close above 251. But if we can't get that, and we do see a close lower than today's low, which was $2.39, that would suggest to me that price is going lower. But before I get on to the downside, one thing I did want to point out about this bearish engulfing candle that we saw on the 12th is that the high on that day went up to $3.48, so just below this orange line here at $3.50, and this white line marked at $3.52. And so that does correspond with a previous low. Let's see if I just do take a step back. We can see that low was hit on November 13th before we had this big run up. And so I do feel like that is now significant resistance, as it was the low here, and we got a wick up to nearly that level, but could not hold it, got rejected on that day before moving down. And that $3.50 level, it does correspond with, let's see, lows over here having acted as support, and then having acted as resistance as well before moving up, support again here. So I do think that is one to be paying attention to. And then the other level that I have marked here, $2.51 marked in red, that corresponds with the low that was hit here. Let's see if I can line that up just right on December 2nd, hitting a low of $2.51, acting as support there, resistance, and then, resistance over here. And now, might be acting as support, but you might notice that below us, I do have this blue line drawn here at $1.11. And that actually corresponds to a gap over here between July 18th and 19th that has yet to be filled. So I could see price going back down to $1.11, if not to $1 a share, as that is right around that gap, and $1 being a psychological level. And if I was a short seller, which I am not, I would think of shorting shares, shorting stocks down to $1 would be kind of like a trophy for me. And so I could see that happening. So I would be cautious of that if we are not able to hold 251 or not able to reclaim it, as that does seem like it was notable resistance over here. It might be acting as notable support here, but if we can't get it, if we can't get above it, then it would be acting as resistance again, and we could see further downside. But perhaps, we don't get down to 111. I could see us stopping right around 150 when we did have these lows over here. They were support then, could be acting as support again. But like I said, this gap has yet to be filled, so it might very well be. And then also another level to the downside, which I hope we don't get to, is based on this Fibonacci retracement here. You can see the 1618 extension down here at a price of 34.97 cents, or right around 35 cents. And so, yeah, there is a lot of potential downside for this stock, considering that, we did just see a very notable bearish engulfing candle that engulfed 5 prior trading days, and we are now below what I view as a key level of $2.50. So if we cannot get above $2.51 either Wednesday or Thursday this week, especially if we cannot close the week on Friday above that level, I could definitely see further downside. But, a little glimmer of hope. The stock does look like it is in the oversold territory, being below 30 in the RSI, with an RSI of 27.57. And so that could be suggesting that this is oversold, the bottom is in or near, and shares might be getting picked up soon. But considering, we did see a lot of volume corresponding with this big red candle, that bearish engulfing candle, we might be seeing further downside. And for me personally, that's what I would bet is going to happen to it. And I could definitely see the price going down to $1.11 to fill that gap. So I would be cautious with this one. But, it is quite possible, though, that if it can hold at 251, we see a retest of this downtrend here, maybe getting up to a price of, above $3 a share, maybe $3.20 a share. And if it can get there, look for a close above $3.50, a reclaim of that level, then as support. But now it's resistance, so I think it's going to be tough. And like I said, I do think there is further downside. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.